I'm always talking about order blocks, support and demand, supply and demand, resistance. I don't talk about it. I talk about gaps. I talk about market structure. Why? Because those are the most powerful and the most effective things in the market that if you really use, trust me, you benefit a lot and you're guaranteed to make money from that. Okay, so I understand a lot of people here, you've heard what Forex trading is, you have placed a trade, and you've actually gotten to a point where you are not profitable. Some of us are not profitable, some of us are profitable. And you keep on asking yourself, what am I getting wrong? Or what's really happening? Well, if you have a notepad, you can just write this down. The most important thing to know in the market is to know when to enter and to know when to exit. So that means the most important thing in the market is entries, right? But for you to be able to know those entries, you have to also know where the market is going, right? Knowing the market, where the market is going, gives you a certain level of confidence. Like, you know what? My market is buying. So I will try to get an entry at this level, right? Or my market is buying, even if it pulls you a bit, but just knowing that your market is buying, it gives you confidence to hold that buy. Or just knowing that your market is selling, it gives you confidence to hold that sell. So what gives you the confidence to know whether your market is buying or selling? Well, I've said this before and I don't want to keep on talking about it. Like, I wish I could share something that is brand new to you guys and effective, but this is the most very effective thing that you can ever find out there, right? There's quite a number of people. They tell me that, please, let's not write on the whiteboard. I'm the only one who's allowed to write on the board. If you write on the board and you keep on writing, you risk being eliminated from this session. Okay, so please, can we cooperate on that? Thank you. Right. So I have a couple of people that tell me the market is buying, and then I ask them why. And then they say, Sekuda, can you not see? Can you not see that my price is a 200 EMA below it? And then some people, they tell me that it's selling. And then I ask them why. And then they say there's a 200 EMA above it. Well, in some instances, this might be true, but I'm one trader that don't believe in trading with those many indicators anymore. I think that's a thing of the past when everyone was still trying to align or try to come with concepts that really work in the market. Although I know that there are some couple of EMAs that work, don't try to keep them many. Use one or two maximum, right? So if you can relate, there's a concept of what we call highs and lows. Basically, by knowing this, you know the direction of the market. But I don't want you to do this. Joseph, I'll remove you from the group if you continue writing. Mr. Joseph, please don't write on the board. So just by knowing the concept of highs and lows, you are able to tell where the market is going. So what does this mean? I don't want you to use smaller timeframes to predict your market direction. For now, we call it prediction, right? But I don't believe in predicting as well, and I'll tell you why. Because predictions is either you are saying you are not very sure, it's most likely to. But with this concept, we want to be 100% sure that it's buying or it's selling. So we are saying when you see your market giving you highs and lows, highs and lows, highs and lows, This means that the market is buying. But the thing that justifies this buy is whenever, let me do this, is whenever I am giving a high and a low, I'm moving in this direction. I'm having a high, right? And I'm having a low. The high that I must get next should break this previous high. So I must see it breaking that previous high to the upside. And then it must give me a new high, and then it must also give me a new low. But this low must not come and break this previous low, right? I'll explain why. So after this low, we must get a new high, which breaks this previous high to give us another new high and get a new low. And we must get a new high going upwards. And this is how I tell that my market is buying, right? But there's an instance whereby it's going to come and break this previous low. Now, this means I'm no longer in a buy, I'm now in a sell. So the market is to give me a new high and a low, a high, a low, a high, a low, but trending in the downside. So the way that we name the market when we are like this is we call this a higher high and a higher low, a higher high and a higher low. And then when we are downtrending, we call this a lower high, lower low, lower high, lower low, lower high, like that, right? Right. So in a nutshell, now let's put this whole concept together. What we are saying is when you open your chart and you are able to mark a high, a low, a high, a low, a high, a low, this means that your market is in the upward direction. Or when you're able to mark a low, a high, a low, a high, a low, a high, a low, that means the market is in the downward direction, right? But using this concept, you don't want to use M1, M5. That's for gurus now. As you proceed with the knowledge or as you proceed with everything, that's when you can maybe move to smaller time frames. But for now, we can start using H4 and H1. Those are the most simplest to know the direction of our market. And remember, we said H4 is what shows us our overall trend direction. H1 is what also shows us our overall trend direction. Okay. So generally, H4 is for direction, H1 is for direction, M15 is for entries, M5 is for entries. I will skip M30 because I don't use it for anything. Sometimes I just use it maybe for some certain confirmations, which I'll get to, right? So now that we've got that, we have to know that if this is H4, remember, we are focusing on an entry. We are trying to look for entries, right? If we are opening our H4 and we see a high, a low, a high, a low, a high, if you go to my YouTube, even I'm going to post this video again on YouTube, you're going to revert back and see the same concept, because this is what always happens in the market. So what you're saying is, if we are seeing a market structure like this in H4, which is giving us a buy, you might confuse yourself when you go into H1 or when you go into M15. In M15, you might actually see the market selling, right? Why is the market selling? In most instances, it's selling because your price, if you zoom in, it's here. It's selling so that it can complete bigger time frame movements. So overall, if you know, if your higher time frame is buying, then that means your smaller time frame is just going in for a short sell. but your higher time frame is the one which is going to rule the market. So you're going to get to a point whereby you are going to see that sell in M15, right? It's going to be having its own market structure. And as soon as it breaks this high, now it will start buying again, right? I explained this. And if you didn't really get it, you replay this video. You replay this video either on YouTube or in our Telegram channel. Okay. So now we've gotten that whole thing that overall my market is buying. Maybe that's when you can come and put your 200 EMA. Remember, indicators are only there for confirmation. Indicators don't tell us what to conclude. They're just there for confirmation, right? I'm having a couple of guys that are saying they are not having any audio. Can you hear me, guys? If you can hear me, just type yes, we can hear you, say Kuda. Maybe you might all be facing the same problem, and I'll be thinking that, okay, thank you. Thank you there, thank you. Right, so now you've known that your higher time frame rules, and you can have your smaller time frame following. So how do you take entries like this? I'll start by showing you these drawings, and then I'll go to the charts, and then I'll show you on charts. Right, so for the next 7 minutes, I'll explain how we can take entries. I want you to listen carefully. All right, please do listen carefully here. Now, this is where part of our tricks, which are permanent in the market. When I say permanent, I'm not saying I'm teaching you something like cram, pass, and forget. I'm showing you something that happens daily. So you have seen your market going up. You can have 3 or 4 types of entries that I'm going to teach you about. One is called the Fib entry or the Fibonacci entry, right? The other one is the order block entry. Right? The other one is the breakout structure entry. But this breakout structure entry is almost the same as the Fibonacci entry. And then the other one is the fair value gap entry. I won't teach about fair value gaps today. I'll do Fibonacci and order block. But I'm not saying everything that you're going to get here is everything that you need to know. Obviously, because of time, I'll skip a couple of actually I won't skip, but I'll just shorten everything. Okay. So whenever you get a high and a low and a new high, so in this scenario with a high, a low, and a high. So what we want to make here is we want to make another new low, or the market will be willing to make another new low. There is a whole different topic on how to spot a high and how to spot a low. Like how to be very sure that this is a high before it even goes any further down or up. I'll also teach about that if you treat me well. Lean, please don't type. Don't draw anything here, please. It's only for share. So we can have a high, a low, a high. For us to continue this uptrend, we need to make another new low, but we don't know where that new low is going to be made. That's when we use what you call a fib. A fib generally is an algorithmic tool that shows you where possible reversals might happen. So you might see that it has different levels. When you put it on your chart, it will be like this. It has 100, 61.8, 50, 38, 23, and 0, right? So what we are saying is, if you go and read books, they will tell you that retracements happen in the 30 to 61.8% zone. I've read books, and some of them have had me lose a lot of money because I'll just be cramming and trying to pass and forget. Well, for me, the 30 has never really worked. The 15 year, it does here and there. But what I've seen working the best for me was somewhere around the 61.8 and another added level called the 71. Right. So this is how you do it. When you see, or when you want to say that your trade is going in the upward direction, you drag your fib from the bottom going up. Because what you're actually saying is you're saying my overall trend is going to be upward. So you go with the flow. So what you do is you're going to see that candlesticks are going to have tails. You don't touch the tail. You separate the body from the tail whenever you're marking your Fibonacci's. Right. Whenever you're marking it, you separate the body from the tail. Once you touch your tails, then that means you have also to adjust your Fibonacci reaction point. Okay. So I'll go to the actual chart and show you something. I'll go to the actual chart now and I'll show you something. Okay. So I'm just fixing my chart just a bit. Right. So I shall be sharing my screen with you guys. There we go. So in this instance, we have V100. And since I said we deal with larger time frames, I'll also show you with larger time frames. So with this V100, what you can see is we have highs and lows. This is a high, this is a low, this is a high, this is a low, this is a high, this is a low, a high, a low, a high, a low, a high, a low, a high. So for those that don't know what I'm saying that this is a high here. Let me change color so that you can see. Let me put red. This is a high and this is a low. And what you can see is we broke the previous low. Now we are making another new high. For us to continue the downward direction, we need to break this low over here. We need to break this low over here. So what do you see? We came and we broke it, right? And for us to continue in the downward direction, we also need to come and break which low? This low over here. So what do you see? We came and we broke it here. We broke it there. Are we understanding? Are we together? Are we together? Are we together, guys? Are we understanding? If you are getting confused, just type confused. Right. So now that we know what to expect from the market, let's pretend, or let me just do this. It's okay. I'll remove that. What you can actually see is when we made this low, we also made this high. No. In a way that you can understand, I'll start by saying this. When we have this high, we made a low. But remember, everything that's in the box, we didn't know where and how it was going to happen, right? But if you take your fib, since we are going down, you drag your fib and go down with it. We expected that when we reach the 61.8% or the 71%, we get a reaction. And what you can see is from that low, we went straight for the 61 and 71 right there, and we reacted. It was a sniper entry, and then we fell. Right, I'll delete everything. After that, now what you see is we have another new high and a low that are here, but we don't know where this high is going to react. So what do? We take a fib, we measure it from the high to the low, and what do you see? When we came to the 71% level and the 61 here, we reacted and then we fell. Are we understanding? Are we understanding? Are we understanding what I'm saying? Are we understanding what I'm saying? Seems like a couple of guys are having audio issues. If you're having audio issues, I can't. There's no way that they can hear me. So I think I'll just have to type in the group that they. All right. So that's our first initial example on Fibonacci. I'll move right straight away to order blocks because we don't have much time left. So what is an order block? An order block is actually a last buy before you sell candle or a last sell before you buy candle. But whenever you're focusing on an order block, it's always advised to focus on order blocks from larger time frames. And when you focus on them, we have what we call refining, so that you refine them to smaller time frames to get a more detailed sniper entry. But I'll start making an example first. An order block is a last buy before you sell or a last sell before you buy, depending on the direction you're coming from in the market. So if we're having an uptrend, right? If we were having an uptrend, you are going to see that before we broke structure, we had a last buy candle here that was responsible for this order movement. Actually, I can say it was responsible, but we have a last buy before we sell. So that last buy before we sell is of much importance in our trading. Why? Because it's what you call an order block. We have different types of order blocks that you're going to look at in the future. But for now, I'll just tell you what an order block is. And in the event that we were selling, we have that last sell candle that happened before we bought. And usually you can find it here at the bottom there. So when you see that your trade was playing, let's say in this manner, when you see that maybe you were in a buy, right? You were in a buy, you were in a buy, you were in a buy. Before you started selling, you have that last candle that you see, that last buy. What you do is you mark it, you put a zone on it, and this zone is what you're going to call your order block zone. But we just don't want it to be there for the sake of just saying, you know what, I think I saw in order block. So let me mark it. The most effective ones are the ones that break structure. What do I mean by that? Let's say this was your low, your previous low, right? If it gets broken here, this order block that is here becomes very valid. Why? Because it's responsible for breakout structure, right? Let's say maybe your trade was coming from a downtrend. It was in an uptrend, and then it chooses to come break structure and then starts falling. What you're going to see is, in the future, this whole area here, your price will come to it, react to it, and then fall. Why? Because it's an order block, and it's meant to be mitigated, right? So I will be honest about this. And these concepts, they work everywhere, be it currencies, be it volatilities. But if you place them on currencies, they will be very nice. So that's how I'm able to come up with sniper entries almost every time that I trade. Why? Because I'm trading those order blocks. I'm trading with Fibonacci's, right? So I'll mark an order block on charts so that you see what I mean. Right. So for example, we can start here. What you see here is before we broke structure here, we have a last buy before we sold. So we mark it here. This is our H4. And we expect price to tap in that zone and fall. This is an order block area. And what you see, price came, tapped in that area and fell. Right. Before we broke structure again, where here, remember this is a low, a high, a low, a high, a low, a high. What you can do is you can mark this last buy before we sold. And what you see, price just came in, tapped, and then it fell. Another example is here. You can have many order blocks in the market, but there are the ones that are relevant, and then there are ones that are not relevant. Right. Are we understanding this? Are we understanding? If you're understanding, let's just type yes. All right. So our meeting is telling us that we have 4 minutes left. A lot of people are saying yes, they're understanding. In those 4 minutes, can you kindly ask me questions that you want to ask me? I'll always continue with this topic in our next session. Can you ask me questions? Or maybe we can go in the discussion group on WhatsApp and then finish with whatever we want to finish with. Yeah, so this is how I catch spikes. So this is how I catch spikes. So what you can actually do is, since we don't have much time on our Zoom, you can go to our God Forex YouTube channel. You access this video and previous videos that we've made before. You can as well go on our Telegram channel. I'll post the Zoom link. I'll post my WhatsApp contacts. I'll post everything. So if you go on Telegram, just search God Forex Academy. If you go on YouTube, just search God Forex Academy as well. You see my name, Sekuda. That's how you know it's our channel. So our next session is going to be tomorrow. at 4 a.m. sharp. We're going to have another session at 4 a.m. We will be doing analysis of trades at 4 a.m. If you have any questions, feel free, come to my inbox on WhatsApp or come to my inbox on Telegram. And then we can talk even on Instagram. We can talk there. We now have a channel on Instagram. So if you go on Instagram, just search Say Kuda Code Forex. You will find me there. So once again, thank you for attending this session. It was such an honor to be listened to. And I hope what I've taught you is going to help you in all ways necessary. I always wish us to have money together and to win together. Definitely, if you follow these sessions, you are going to benefit a lot. So thank you a lot. Have a good night. Cheers to a new week.